Thank you for your time this morning to allow us to provide this presentation at the Blockchain Working Group. Go to the next slide. The agenda for today is to cover these 5 areas, well, 4 primary areas, and then Q&A at the back end of the session. So we're going to hit our core capabilities from an Infotrend perspective, and then from there we're going to dive right into our blockchain expertise. We're going to be providing some industry insights, and then we're going to be talking about just give an opportunity for everybody to ask questions and provide open comms as we move through the presentation. Next slide, Ian. So a little about Infotrend, and I'll give a couple 10 seconds on the company and 10 seconds on myself. Infotrend's a 8A certified small business. We help manage and solve business and technology challenges in data, emerging tech, and training. We're experts in deploying timely, agile solutions to solve complex issues. Our 5 core competencies are IT solutions, data and legal solutions, management consulting, business automation, training and knowledge management. And we are located here in the DC metropolitan area. Next slide. We broke out our core capabilities, but what we're going to be highlighting today in our IT solutions, you'll see data analytics, blockchain. Under legal solutions are data governance, program project management, and data integration. And a little about me, and then I'll turn it over to Ian. I'm the VP of Client Services here at Infotrend. So if there's any questions about the company and/or our expertise, please feel free to reach out. I'd ask that everybody hold questions until the end. Feel free to use the chat window to throw your questions in there, and then we'll work through all the questions towards the end of the presentation. Ian, I'll turn it over to you.
All right, thank you, Shobit. Thank you, everybody, for joining this presentation for the next 45 minutes here. What we're going to do is really dive into 2 of our industry insights blogs posted, and towards the end, we'll give you the links for those. And it's really tailored to the digital assets market, as we are kind of the market leader in digital asset services for government agencies. The first one we'll cover here is titled Bitcoin's New Frontier. And this is very timely. If you guys remember in the last call, we had somebody speak up and ask if we could do a presentation on Ordinals, on BRC20 tokens, all of the developments happening on top of Bitcoin. And that's exactly what we'll start off covering here today. And then I'll kick it over to my colleague, Lewis, who will discuss IOSCO's policy recommendations for the crypto and digital assets market, and really tailored to the recent SEC lawsuits against Binance and Coinbase. It's great to see everybody on the call here from various government agencies, from industry professionals. Let's dive into the material. So who am I? I'm Ian Melhorn. I'm the Senior Manager of Digital Assets at Infotrend, and I focus primarily on partnerships within the industry, various data providers, as I come from the industry, and you'll see that coming up here shortly. I focus on research, which we're covering here today, and a few federal acquisition strategies and approaches to help our team move forward in the digital assets arena. So primarily what we focus on, that I focus on, is providing corporate guidance to delivering crypto exchange market data and industry insights on the digital asset market to the SEC, and we work with our team on the contract for that. So we work with the Securities and Exchange Commission primarily on the digital asset side, the data, blockchain side. And I do have an MBA from University of Maryland and a FinTech programming certificate from George Washington University. And as I mentioned, I come from the industry. First started out at Bittrex in the compliance department as a compliance analyst. And for those that don't know, Bittrex was one of the leading altcoin exchanges in the 2017, 2018 era. And then most recently, I came from Circle as the crypto and blockchain training lead, where I spearheaded the launch of Circle University, which is a digital assets education platform. And for those that don't know, Circle is one of the leading, largest crypto companies in the space, and they're most notably known for USDC, their stablecoin, US dollar coin, in partnership with Coinbase. All right, so let's get into the research and what we'll touch on here today for my section, which is starting off delving into the Bitcoin Taproot upgrade, and then we'll position the Taproot upgrade as the launch pad for Bitcoin Ordinals, and we'll delve into what all of that means. And we'll talk about BRC20 tokens on top of the Ordinals protocol, and we'll get into the pros and cons of all of this proliferation of network activity in terms of Ordinals and BRC20 tokens causing network congestion in Bitcoin. But there's also a positive side to that, which we'll touch on as well. And then we'll finish with, what this means for Bitcoin, the future of Bitcoin. All right, so let's get into the research here. So really, if you follow the space, you'll know that Bitcoin's, protocol, the blockchain, has remained, pretty much a model of stability and consistency, an industry that's known for rapid innovation and development. Here in the blockchain working group, we tend to stay abreast of all of these developments, in weekly calls. So you all are well aware of these rapid innovations. In November 2021, Bitcoin underwent a significant upgrade, which is called Taproot. And this modification marked a turning point in the structure of the Bitcoin blockchain. The Taproot upgrade was designed to enhance Bitcoin's scalability, privacy, and composability. And Taproot represented the first major upgrade to the Bitcoin blockchain in over 4 years. And this followed the implementation of something called segregated witness, or SegWit. And this upgrade, SegWit, separated the structure of Bitcoin transactions into a transaction piece and a witness part of that transaction to enhance the efficiency of data storage. And we'll talk about why that's important coming up here. So let's get into what this Taproot upgrade, the most recent upgrade on the Bitcoin blockchain. Let's talk about the different Bitcoin improvement proposals, or they're also called BIPs, that laid the foundation for this upgrade. And then shortly thereafter, we see the launch of Ordinals and BRC20 tokens because of this upgrade. So the first part of kind of this 3-part upgrade that all was encapsulated in the Taproot upgrade, something called 340, which introduced Schnorr signatures, which is a digital signature scheme that's faster, more secure, and less data intensive than the previously used ECDSA, which is elliptic curve digital signature algorithm. And BIP 341, the next one here, introduced pay to Taproot. And as I say these terminology, don't pay too much attention to each one of these bolded points here. Think about what this enables, which pay to Taproot is a new way to send Bitcoin that enhances privacy and flexibility for the users. And it also implemented something called Merkleized alternative script trees. And what this does is compress complex Bitcoin transactions into a single hash, which helps reduce transaction fees, minimizes storage, and improves Bitcoin scalability. And the last one here, BIP 342, is an update to Bitcoin's original scripting language that encapsulates these previous two. So it improves the efficiency of pay to Taproot transactions by leveraging Schnorr signatures. And most notably here, Taproot improved on SegWit, the SegWit upgrade, by eliminating the data storage caps in the witness part of the Bitcoin transaction. And this is what set the stage for the creation of Bitcoin Ordinals. So the Ordinals protocol, It's a groundbreaking, innovation by Bitcoin core contributor named Casey Rodarmore. If you want to follow on Twitter, it's at DOMO DOMO data. And the Ordinals protocol introduces this concept of enabling inscriptions on individual Bitcoin Satoshis. So Satoshis are the smallest unit of measurement of a Bitcoin. So the Ordinals protocol assigns each Satoshi a sequential number, and this creates an order among the Satoshis. So this concept of ordering is named ordinal theory. With this ordering and identification system, users can, now inscribe any arbitrary data into individual Satoshis. And this innovation gives Bitcoin the inherent capability to create unique non-fungible tokens, or NFTs. And this is similar to, if you follow the Ethereum ecosystem, the ERC 721 NFTs. So the witness section of the Bitcoin transaction holds the arbitrary data, as we mentioned, that someone inscribes to a single Satoshi. So the inscribed arbitrary data can be, and has been, almost anything up to this point. So for example, you have a playable version of the game Doom. You have Ordinals punks. If you follow Ethereum, you'll know crypto punks in the Ethereum ecosystem, which are a type of NFT collections that are very popular. And this column chart that you see here by Glassnode showcases the inscriptions count per different types of data stored. So you have images, audio, video, text, other category. And as we can see, the text-based inscriptions are the most popular over the image-based inscriptions, which come up next. And then following the launch of Ordinals, Casey Rodarmore also proposed an additional use for the Ordinals protocol. So the proposition involved using Ordinals inscriptions in JSON format for deploying token contracts, minting tokens, and transferring those tokens. So this effectively enabled the creation of fungible tokens on the Bitcoin blockchain. And this is via the BRC20 token standard is how this happens. So similar to Ethereum and ERC20 fungible tokens on Ethereum, Bitcoin now has BRC20 token standard on Bitcoin. And this creates fungible tokens after what we just talked about, Ordinals, the NFTs, non-fungible tokens. So let's get into the pros and cons of all of this activity happening on top of Bitcoin now. So the introduction and popularity of the ordinal inscriptions and BRC20 tokens led to this increased congestion in the Bitcoin network. And this results in a surge in transaction fees. So in other words, when the number of transactions increase and the demand for block space increases, so do transaction fees. And as you see in this chart here, showcasing Bitcoin's price and number of transactions per day historically, this proliferation of activity resulted in a new all-time high daily transaction count of 682,000 transactions. And this, for context, surpasses the 2017 market peak. And this highlights the intensity of Bitcoin's recent network congestions. However, the rise in transaction fees due to the popularity of Ordinals and BRC20 tokens, it created this additional incentive for the miners of the Bitcoin blockchain. So as the block subsidy rewards, as they're scheduled to decrease over time due to something called halving events, and this is shown in the blue line chart here that you see on the chart, the higher transaction fees help compensate for this decrease in subsidy rewards. So this increases the mining profitability and the overall security of the Bitcoin protocol. So as the chart showcases, for only the 5th time in Bitcoin history, the average fee paid per block, which is in orange there at the bottom, has surpassed the block subsidy reward in blue. This is five times historically. And the last time this occurred was, again, the 2017 market peak, which underscores the significant growth and activity in the Bitcoin network. So to summarize here, the emergence of Ordinals and BRC20 tokens on the Bitcoin blockchain, facilitated by the Taproot upgrade, it's a significant milestone in Bitcoin's evolution. It expands Bitcoin's potential beyond its original use case as a peer-to-peer electronic cash system. And if you read the Bitcoin white paper, this is the title. And despite these developments, the ultimate value and application of Ordinals and BRC20 tokens remain uncertain. So in Casey Rodarmore's Git book, which contains information about the Ordinals protocol, the headline explicitly states, read every word if you decide to test. These will be worthless. Use at your own risk. Additionally, Bitcoin lacks extensive DeFi features, so moving BRC20 tokens into Ethereum or alternative layer 1 DeFi ecosystems will like bridges or wrapping mechanisms to move those assets. And this adds a layer of complexity and potential security vulnerabilities. So keep in mind, the BRC20 standard is still a proposal and may not gain widespread integration into blockchain infrastructures like wallets and exchanges. However, efforts to support these innovations are gathering momentum. Ultimately, these network innovations are at the early stages of development, but they have the potential to redefine our understanding of what can be achieved on the Bitcoin network. All right, I'll hand it over to my colleague, Lewis.
Hey, good afternoon, everyone. Thank you for having me. Ian, great job on the BRC20. I see we got some great questions in the chat already. We'll address it afterwards. So we're going to look at IOSCO's policy recommendations for crypto and the digital asset markets. I'll give a little introduction to myself, and then we'll get right into it. So good afternoon, everyone. I'm Louis Hasni. I've been immersed in the crypto space since 2016. I'm lucky enough to act as the crypto and digital asset SME for Infotrend. I have a legal background, having graduated from New York Law School in 2012. I'm admitted to both the New York and New Jersey State Bar. I try and keep myself updated with the latest trends, innovations, technical happenings, and regulatory developments in the space. Okay, so today we'll be diving into the intersection of international regulations and the cryptocurrency landscape. The agenda for the next few will begin by introducing the International Organization of Securities Commissions, or thankfully abbreviated IOSCO. We will be discussing its role and how it influences global financial regulation. And next, we'll explore a recent initiative by IOSCO, which proposed policy recommendations aimed at providing a global framework for the crypto and digital asset markets. And then finally, we'll apply the proposal recommendations set forth by IOSCO to the latest SEC allegations against both Binance and Coinbase, and offering some insights into the potential future directions of the industry. So firstly, what is IOSCO? IOSCO was established in 1983. They're an international body that brings together the world's financial regulators across the securities and derivatives markets. Its members comprise of the world's leading financial regulators. In total, they oversee more than 95% of the world's securities and derivatives markets across over 130 different jurisdictions. IOSCO plays a pivotal role in promoting high-quality standards of regulation. Its mission is to ensure that markets operate in a fair, efficient, and transparent manner, providing a level playing field for all the participants. A cornerstone of IOSCO's mission is to protect investors worldwide. It strives to maintain trust in the financial markets by encouraging adherence to robust regulatory standards, and by working closely with other international bodies to ensure fair, efficient, and transparent markets. IOSCO's goals are to protect investors around the world. While IOSCO is a significant player in the global regulatory landscape, it's important to understand that its authority is not technically legally binding. Instead, it plays a highly influential role in promoting international standards and principles for financial regulation. The principles developed by IOSCO serve as guidelines for each. They set the stage for high-quality standards of regulations that each country can then implement according to their own unique regulatory frameworks. However, despite the lack of legal obligation, IOSCO's recommendations historically carry substantial weight. IOSCO's recommendations are taken into consideration by regulators worldwide when shaping their own laws. So the United States is an active member of IOSCO through two of its most important financial regulatory bodies: the U.S. Securities and Exchange Commission, or the SEC, who is responsible for overseeing the U.S. securities markets, and the U.S. Commodity Futures Trading Commission, or the CFTC, who is responsible for overseeing the U.S. derivatives markets. By being active members of IOSCO, both the SEC and CFTC participate in drafting international standards, sharing best practices, and collaborating on potential regulatory issues. So on May 23rd, 2023, IOSCO unveiled a set of 18 policy recommendations aimed at the digital asset space in a 68-page document. IOSCO structured its report into 9 primary chapters, each chapter addressing key aspects of the digital asset market, detailing associated recommendations. The need for crypto and digital asset markets to adopt to the traditional finance market structure is a common theme throughout the report. IOSCO's primary recommendation to regulators is that they should seek to achieve regulatory outcomes for investor protection and market integrity that are the same as those required in the traditional financial markets. This includes the establishment of common standards by regulatory outcomes, governance and disclosures of conflict and potential conflict of interest, order handling and trade disclosures, and considerations around the listing of specific crypto assets. There are also recommendations on addressing abusive behaviors, enhancing cross-border cooperation, ensuring proper custody of client monies and assets, and addressing operational and technological risks. The need for the crypto market to adapt to the traditional financial market structure is a common theme throughout the report. One of IOSCO's primary recommendations to regulators is that they should seek to achieve regulatory outcomes for investor protection that are the same as or consistent with those markets. So as anyone who's been following the news is quite aware of, SEC has shown a keen interest recently in enforcing the principles outlined in the IOSCO report against the crypto space, as evident in the latest cases against both Binance and Coinbase. So on June 5th, 2023, the SEC filed 13 charges against Binance, the world's largest crypto exchange. Among the charges were allegations that Binance operated an unregistered exchange, broker-dealers, and clearing agencies, which directly align with IOSCO's principles of avoiding vertically integrated crypto asset service providers. IOSCO basically wants the digital asset space to operate similar to the traditional finance space, where different entities manage different functions. A bank might hold our money for safekeeping, while brokerage firms might execute our trade, and we might go to a financial advisor to develop our investment strategy. So here, Binance was in essence operating as all of the above in a vertically integrated manner, according to the SEC, in violation of IOSCO protocol. The SEC also claims that Binance secretly allowed high-value US customers to continue trading on their platform of Binance.com. This lack of transparency and the alleged manipulation of trading controls goes against IOSCO's principles for ensuring market integrity and client asset protection. The SEC also alleges that Binance commingled customer funds with other business ventures, violations of IOSCO's policy recommendations on the custody and safekeeping of assets. The SEC alleges that by commingling customer funds with other business ventures, Binance is not only risking the security and integrity of these assets, but also undermining investor trust and violating standards of transparency and accountability. The SEC has also recently brought charges against Coinbase, the second largest crypto exchange. The SEC alleges that Coinbase is performing 3 distinct roles traditionally seen in the securities market, namely the role of brokers, exchanges, and clearing agencies. The issue at hand is that Coinbase never registered with SEC for any of these roles, thereby bypassing required disclosure regulations and once again violating a key principle of the IASCO recommendation against vertically integrated crypto asset service providers. The SEC charged Coinbase for failing to register the offer and sale of its crypto assets staking as a service program, and the SEC has highlighted that Coinbase offers access to crypto assets with high risk scores. These scores are determined based on the Crypto Rating Council framework, which Coinbase, along with several other crypto organizations, have adopted and implemented. This slide presents a Venn diagram showing 19 cryptocurrencies that the SEC alleged in its lawsuit against both Binance and Coinbase that violate the Howey test. Note 8 of these digital assets overlap between both platforms. For understanding these classifications lies in the Howey test, a precedent established by the US Supreme Court in the 1946 case of the SEC versus Howey Co. This test sets the standard for distinguishing investment contracts or securities from other types of contracts. According to the Howey test, a transaction qualifies as a security if it involves an investment of money in a common enterprise with an expectation of profit predominantly from the effort of others. The SEC contends that many crypto assets fit this definition. So to put it in perspective, the SEC's argument is that a person typically invests money in a specific crypto asset in an enterprise where the financial success of the crypto asset is dependent on the project team, expecting the crypto asset to rise in value due to the efforts of the team members. There has been discussion in the legal field about potentially applying the Reeves test to certain digital assets. Consensus largely remains that the Howey test continues to be the leading determinant for whether a cryptocurrency functions as a security in the United States. But if anyone on this call ever wants to go down that particular legal rabbit hole or any crypto-related topic, I'm always available to chat about this offline. So now we'll take a look at where the industry is headed next. IASCO is currently holding public consultations on its recommendations for the crypto and digital asset market. They aim to finalize these recommendations by the end of 2023. Once these recommendations are finalized, IASCO expects jurisdictions worldwide to review their current regulatory frameworks. The aim is to ensure compliance with these standards and promptly address any gaps that may exist. So keeping a close eye on the final version of IASCO's recommendations following the public consultation period will definitely provide a glimpse into the future of crypto and digital asset regulatory laws and enforcement actions. As jurisdictions grapple with the complex and global nature of crypto assets, the IASCO recommendations will be a blueprint for regulating this emerging industry to assure a fair marketplace and protect digital asset investors from fraud and abuse. So in conclusion, as we navigate this ever-evolving landscape of crypto assets, staying informed in the latest happenings become more important than ever. So if you'll excuse my plug, I highly recommend keeping up with the Infotrend industry insights. I've had the privilege of working with some truly exceptional people on our team, and I can confidently say that their dedication to providing detailed industry insights and developments about this dynamic industry's future is unmatched. I hope you all found something valuable or insightful in this presentation. Thank you for your time. Thank you for having me. Thank you for your attention. And I want to extend an invitation to everyone on this call. Please feel free to reach out to any of us at Infotrend at any time should you want to chat about anything in this rapidly evolving space. We're here to help, we're here to share insights, and we're here to just chat. So thank you again for your time today. And Ian, I'll kick it back to you, or if there's any questions, feel free to reach out.
All right, thank you, Louis. Great overview of IASCO principles. We'll open it up for questions here, and myself, Louis, and Shobit can answer.
Hey, Ian, there looks like there's a few comments / questions in the chat. Maybe we can start with those. It looks like they're from Ryan.
Yep, could somebody call them out, or Ryan, feel free to speak up.
Yeah, I was curious if Ordinals have any use case for public agencies?
Public agencies. So given they're, a new form of a non-fungible token, I actually view this more as a potential forensics outlet for public agencies, and in terms of you have, you know, the Chainalysis, you have TRM Labs, all of these blockchain forensics companies. And if you really think about tracking the funds for assets, if it's down to kind of uniquely individual satoshis of a specific Bitcoin that makes up a full Bitcoin, now that they're ordered by, you know, the inscription level, you can essentially track each individual satoshi from origination as the block subsidy reward into the miner's wallet through various other wallets to the end user. And now you can kind of break down, you know, a full Bitcoin into the individual satoshis level for blockchain forensics.
I saw Ryan put in the chat, he was asking, would a Bitcoin reorg affect the ordinals? I actually saw someone put out a thought piece on this recently. For those who don't know, a reorg is a situation where one part of the network has accepted one version of the blockchain and another part of the network has accepted a different version. So in a reorg, the longest chain, the one with the most proof of work, is accepted as the valid version of the blockchain. That means the blocks from the discarded shorter chain are often called the orphan chain are removed. So if that was the case and there was a reorg and there were ordinals that were minted on the shorter chain, they might be orphaned in this process and and they might just be renumbered. So yeah, potentially a reorg could affect the ordinals.
All right, does anybody, I see more questions come in. If somebody could, you know, speak up or call them out in the chat. Lewis, do you have any you can call out from there if you've been following?
Sure. Yeah, I've been seeing this. Ryan, you've been a great contributor. Thank you. Ryan wrote, regulatory agency is embracing the characteristics of a public ledger, and on-chain verification seem like an enhancement to what's occurred over the last 3, 15, and 21 years. What use cases might ordinals have for public agencies? Like Ian mentioned, like currently, I don't think ordinals are going to have a public use case for public agencies. If they become an accepted standard and the BRC20 standard does start becoming more utilized, it's possible we'll see public agencies start utilizing them. They do offer certain advantages over NFTs. NFTs will specifically point to something. There's nothing actually hosted on the 721. It points to a location where that data is stored. The ordinal would actually have something specifically inscribed on the Satoshi. So that would offer possibly a better way of showing provenance or proving something. If that was something that would become more accepted down the road, I could see that as a potential use case where public agencies might feel more comfortable utilizing an ordinal. But I think we're still a far ways away from that.
And I'll add on to that, Lewis, and address a few questions that I'm seeing in the chat, kind of around the same topic of the implications of ordinals in terms of public agency oversight. I think we have denial of service attempts, spamming inappropriate data as an example here. I think that is a valid concern, as there's a combativeness going on currently with miners and users of Bitcoin, whether it's appropriate to have all of this trivial, they call it, activity on top of the Bitcoin blockchain, taking up the block space of each Bitcoin block. And this, again, causes the surge in network fees, as we discussed. But again, there's a pro to that, which is increasing the security of the Bitcoin blockchain through maintaining proper reward systems for the miners as the block subsidy reward decreases over time. Every 4 years, the Bitcoin blockchain goes through a halving event, and miners earn less and less Bitcoin over time. But if all of this activity is occurring on the Bitcoin blockchain, increasing the transaction fees, then the miners can earn more revenue, and they have been. But again, there's also a con to that where users may not want to use the Bitcoin blockchain if the fees are very high, similar to what we see in the Ethereum ecosystem as activity picks up. And one other thing I wanted to mention here in terms of the impact for public agencies, specifically the SEC, I would kind of, align what occurred with in the Ethereum ecosystem in 2017, 2018 era with ICOs or initial coin offerings, with all of these tokens that popped up in the Ethereum ecosystem, and a lot of speculation occurred from that. A lot of, rug pulls, or which is a common term in the industry, or just outright fraud and, taking investor money and running off with it. You could potentially see a case of that within, Bitcoin, with all of these new tokens popping up in the Bitcoin ecosystem. Again, a lot of investment activity, a lot of speculation is happening, but there could also be fraud and abuse from that, similar to the ICO era. So that's a concern to keep an eye out for as well. And Ryan, yes, correct. Subsidy fee versus transaction fees balances are very important to consider after another halving coming up in 2024. All right, so any other questions here we haven't addressed, or anybody want to speak up?
I had one final question. Is there any like schemes within Ordinals to ensure I can't just come on and just copy a JSON object and put another on chain? Do they refer to other transactions, or an authorized transaction from a minter or anything? Or given that it's just essentially JSON smushed into a transaction, are there any assurances that prevent that?
Yeah, along with that thought, Ryan, if you follow the ORDI token, ORDI token, they actually minted past the supply cap, and they were the remaining after the supply cap were deemed to be invalid, so they didn't move forward as additional tokens for ORDI. And I'm not quite sure what occurred under the hood for that kind of burning or that invalidation of the additional supply cap. But I would think, along with your question or concern, I think there may be the answer underneath the hood of what occurred there and what could occur if, copying any JSON file or invalidation from that.
Got it. And it seems like they're being used as like a type of colored coin. Have you seen,
Yes.
Number one, is that accurate? And then two, have you seen other types of like schemes or standards to try to do colored coins?
Yeah, so colored coins, original NFT use case on the Bitcoin blockchain very early on. I think that's a big misconception in the ecosystem is a lot of people think this is kind of the first time that NFTs, were involved with the Bitcoin blockchain. But it happened previous times, colored coins being, the most notable. I don't see at the moment, there's new BRC 721 standards and a few other variations to really integrate with wallets and marketplaces and create more dynamic activity for BRC ordinal tokens. So there's more, standards evolving, but I think there's more to really speak about on the BRC20 side, the fungible token side on the Ordinals protocol. For example, you have ORC20 tokens and other variations popping up. And this is where, as we left off, the uncertainty of the future of BRC20 tokens as they are a proposal. If other implementations, other standards get adopted by infrastructure in the ecosystem over BRC20 tokens, then they could be deemed useless. So it's really just a novel field that's playing out currently. It's interesting to keep an eye on.
Yeah, to piggyback on what Ian was saying, we've seen on the ordinal side, people try and inscribe a lot of things to sort of piggyback onto the early NFT days on the Ethereum side. Like people have inscribed fully playable games of Doom and other video games onto specific ordinals. But like as Ian was saying, we've seen more action on the BRC20 side of things, where people have tried to mint BRC20 tokens that are similar to an Ethereum ERC20 token. So we've seen Pepe token, which is a big meme coin on the Ethereum takeoff, and instantly someone tried to replicate it on the BRC20 side of things, where it got a little bit of traction and then sort of faded away. But we've been seeing more people utilize the BRC20 side of things than even the ordinals.
Omar, did you have a question?
Yeah, just I know Ian mentioned that Infotrend has some contacts with the government agencies, and I was wondering if you have heard any position from like FDIC or Treasury when it comes to cryptocurrency. I mean, I know a long time ago I discussed with FDIC that there is some folks interested in that. So have you seen anything? Especially we are in the planning phase of start doing our due diligence in terms of tokenization, of assets.
Yes.
So, and for us, the government, it's a bit different when you start dealing with international organization. We're not really interested to, especially if there is no regulators behind it. I mean, we look to FDIC, Treasury, SAC to give some kind of insight. So I was wondering if you have any insight to share or any directions that you have heard from those.
Yeah, I mean, for context, Infotrend has various other projects and contracts at a handful of agencies on the public side. For digital asset work, we're primarily focused on the SEC, Securities and Exchange Commission, internally, and you see all of the announcements lately from the SEC. For FDIC and Treasury, IRS, all of those, they are very, forward thinking in the space. And if you are reviewing RFIs coming out, Treasury and the IRS recently announced kind of a digital asset marketplace analysis RFI and a few others in the public sector are picking up steam on the digital asset space as regulation and lawmaking and the Hill in Congress is really, that's top of mind right now, as you see a lot of hearings recently. And I think to answer your question more specifically, we have as I came from Circle, one of the leading USDC stablecoin platforms as an alternative digital currency to the US dollar. We have the Fed now looking to, provide oversight into stablecoins, with Jerome Powell recently mentioning stablecoins are a form of money. You have CBDCs to think about tokenized deposits, and you have, prudential banking regulators like FDIC, OCC, all of those that are really, trying to grasp what's happening in the market and carve out their jurisdictional oversight. So this industry is not going away. It's I view this regulatory kind of clamp down, you might call it, as really a stamp of approval to be able to operate in the right guidelines to enable this industry to grow and become mature and mainstream. So with that, I want to close out here because we only have a few minutes. Thank you for all of the interesting questions, and feel free to follow Infotrend Digital Assets and our industry insights. And thank you for Josh and Fred for allowing us to speak to the Act-Iac blockchain working group. Thank you, everybody.
Thank you, Ian. Thank you.